Tata Motors, India's leading automobile manufacturer, announced its financial results for the first quarter of fiscal year 25. While we decode it for you, we will also talk about some significant announcements regarding the demerger and merger of its segments. So hold on tight and zoom into today's video. To start off, Tata Motors is a leading global automobile manufacturer and part of the illustrious multinational conglomerate which is the Tata Group. They boast of being India's market leader in commercial vehicles and among the top 3 in the passenger vehicles market. Currently, they have a product portfolio offering commercial vehicles, passenger vehicles, luxury vehicles, which is the Jaguar Land Rover business, and recently forayed into the electric vehicles. Apart from these, they also operate in the vehicle financing business referred to as Tata Motors Finance. But did you know an interesting fact about Tata Motors? A major chunk of revenue, about 71% of the revenue, comes from the JLR segment, which is a premium segment of Jaguar Land Rover. Commercial vehicles, which comprises trucks, comes in second at 16.5%, followed by passenger vehicles at 10%. Others, which basically includes the IT services and insurance broking services, along with the vehicle financing segment, makes up about 1.3% of the revenue. Okay, now let's quickly jump into the first quarter results of the fiscal year 2025. Tata Motors, the company with the highest market capitalization among all Indian automobile majors, reported strong performance in revenue from operations of 1.08 lakh crore, an increase of 6% compared to the year ago period. EBITDA as well witnessed a 6% increase, with the margins remaining the same. EBIT, on the other hand, witnessed a 10% growth to around 9,000 crores and saw its EBIT margin improving by 30 basis points to 8.4%. The highlight of the Q1 results was a surge in the net profit to 5,692 crores, an increase of an impressive 72%. Another point to note is that sequentially it witnessed a decline from the previous quarter. This is because of the nature of the auto sector, which goes through shifts and is cyclical in nature. To conclude, overall, while the revenue figures were in line with estimates, the profit exceeded expectations of street estimates. While we just discussed the overall revenues, let's see how the segmental business performed. Talking about Jaguar Land Rover, the major contributor to the overall revenue, saw an increase of 5.4% from the year ago period to 76,899 crores. Key drivers were favorable volume mix and an improvement or reduction in cost. Looking ahead, there will be production constraints in Q2 and Q3 due to a plant shutdowns for a supplier. The commercial vehicle segment saw its revenue growing 5.1% and margins improving considerably to 8.9%. The expectations for a healthy monsoon and thrust on infra development by the government will improve the demand for commercial vehicles. Lastly, passenger vehicles witnessed a decline of 7.7% in revenue due to the impact of heat waves and general elections, with inventory piling up dealer showrooms. However, demand is expected to pick up next quarter due to the festive period, ideally which is from September to December. Additionally, electric vehicle provides an attractive opportunity for growth with new product launches. Despite the strong performance, Tata Motors saw its share price decline by around 4% today. However, over the 6 months period, it has increased by 25%. But anyway, let's understand why. Tata Motors witnessed its sales decline in the month of July. If you see the image on the screen, commercial vehicles saw a decline of 18% in the month of July, while passenger vehicles witnessed a decline of 6%. Talking about the overall domestic sales, it reduced by 11%. Second, while the overall financials saw robust performance, Tata Motors' net automotive debt increased to 18,600 crores, up 16% from the 16,000 crore at the end of March 2024. Additionally, Jaguar Land Rover's net debt rose to 10,500 crores, up from 7,700 crores at the end of the March quarter. Moving on, at the same time, the board of Tata Motors made some significant announcements. The board of Tata Motors has approved the demerger of the company into 2 separate listed entities. The commercial and the passenger vehicle business will be segregated and be listed separately as Tata Motors Limited Commercial Vehicles Limited and Tata Motors Passenger Vehicles Limited as highlighted on the screen. As per the arrangement, the share entitlement ratio will be 1:1. That is, the shareholders of Tata Motors Limited will have an identical shareholding in both the listed entities. This decision aims to unlock value for shareholders by creating focused entities with distinct strategies and growth plans. This entire process is expected to take around 12 to 15 months to complete. Second is that Tata Motors is also merging its financial services arm, Tata Motors Finance, with Tata Capital. This consolidation will create a larger financial services platform with a broader product range and a stronger balance sheet. The merger, which is already underway, is expected to conclude in the next 9 to 12 months. All in all, the strong Q1 performance along with the strategic initiatives demonstrate the company's commitment to driving growth and creating value for shareholders. The road ahead, though bumpy due to global muted demand, is supported by domestic demand during the next few quarters on account of continued investment in infra, healthy monsoons, and festive demand, which could support Tata Motors. Having said that, this is me, Ralston, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.